Why don't you tell us a little bit about how you see cash flow and what really makes it up?
Sure. Yeah, I always start with the revenue receivable cycle. What are the inflows? They're certainly the one thing that's way beyond your control. So you need to focus on those first. How are you going to get those receipts into the business? What is your typical payment terms? When are they going to come in? I want to get those under control. Look at days receivable. Try to map that into a forecast. As I mentioned before the break, we typically like to do a 13-week rolling cash flow. Our goal is to get 75 or 80% accuracy here to give you just a good big picture feel for when the peaks and valleys in your cash flow are gonna occur. So we forecast out our receipts first. We typically break them down by payment and payment type, whether it be credit cards or check or wire. Try to forecast that and get some accuracy for when those things are going to occur, because they do occur differently and in the normal flow of business. Any anomalies, any large piece of business, for instance, you have one business that equals 10%, one customer that equals 10% of your business, when then they pay you once a month, you want to break that out separately and make sure you've got a good handle on that, because that's a relationship issue that you need to work that relationship to make sure they're going to pay you on the 15th if that's when you're expecting to get paid.
Well, there are also a lot of companies, small, mid-sized businesses that might have a company that does 30 or 40% or 50%. The higher the percentage, the more you have to have someone controlling that.
Absolutely. Somebody's got to manage that account and make sure you know that they've accepted your invoice and that they're going to pay you when they say they're going to pay you. That's critical to any small business. From there, I typically look at non-operating expenses and payments first. And one of the things I see many business owners miss are routine things such as the distributions or dividends to themselves. Oftentimes that can be that's right out. It's not even in a cash plan, but that's something that they're planning on that's critically important to them. That needs to be part of it. Any debt or lease payments, by the same token, that are fixed payments, they have to be in that plan. And anything else that impacts cash from a non-operating basis absolutely needs to be in this section. The last section is what I call the major expense components. And as Alan and I were talking during the break, one of the things here is it's very important to look at your expenses, certainly on an annual basis, but a lot of business owners I know look at it on a monthly, ongoing basis, are always trying to find where they can squeeze a little bit more expense out of the business. Oftentimes technology, phone systems, insurance are great places to look. As contracts come up for renewal, there's new technologies out there. Certainly in the phone, we've seen a lot of shift to the VoIP systems that offer a very good quality service that 10 years ago they didn't have at a much more affordable basis.
For those who don't know, we're talking about voice over internet phones.
Yes.
So some people aren't aware of that, but you can now get whole phone systems that are internet based without the whole hardware and software that you used to have in your own offices. But go ahead.
Yes. Thank you. And little things like that can shave 10, 15, 20, maybe even 50% off of your expense base, and that can really help, on the payment side. But listing out all of those major payments, certainly by major components such as payroll, key suppliers, those type of things, making sure you've got those lined up so that you can meet their terms. And then typically everything else kind of falls in the bucket of what I call accounts payable. And what I like to do is schedule a budget out for cash for accounts payable. So as receipts come in, when receipts come in heavier than forecast, we've got a little extra money to take care of accounts payable. When they come in a little less, then we have to pick and choose and make sure that, we're taking care of the hand-to-mouth people in particular. But also there are other, any critical vendors such as your health insurance that will probably terminate your coverage if you don't pay them. They've got to be top of the list. And then working yourself down to other people that get lower in priority. But it's very important to have that budget amount in there so that you're never spending more than you have coming in. And you have to have a plan. And this is where the entire forecast works together, is having a plan to resolve all of those payables and make sure that you collect all of those cash items, and you're staying on top of those aged receivables and making sure that they get collected. But flowing all that in, and it's really powerful when you have a line of credit and you can forecast how much you need and how much you pay back. Having that whole plan work together is a great way to manage your cash better as a small business owner, and really utilize very effective bank financing at very low rates these days, typically on these lines of credit, but really bridge the gaps between the peaks and the valleys of your cash flow.
But if you can, as we talked about earlier, if you can show the bank that you have a handle on what you're doing, you have a better chance of having the better line of credit, the lower interest rates, in order to satisfy the bank's needs and to satisfy your short-term needs as you move and grow your business. One of the things that you mentioned payroll, but I just want to remind everybody that when you talk about payroll, make sure you're paying your Social Security taxes, your withholdings, and everything else, because they have a total different situation. As we talked last week in bankruptcy, they create a totally different liability in a limited liability company or a corporation. The principals and board members and shareholders might have liability if you're not paying down the road, if you're not paying those taxes. So make sure they're in all that payroll, and included with payroll, your retirement accounts, all of that kind of thing needs to be part of that structure. Just want to remind everybody again that I'm in the studio with Andy Fleischer of Strategic CFO Services. Excuse me, I've got some allergies today, and it's really bothering me. So please call 410-481-1300 if you have any questions of Andy or myself. So you're pulling all this together to create a cash flow statement, which, as you say, rolling 13 week, but it could actually be longer depending on the business. I mean, knowing the businesses was in, I actually did it a 12-month rolling average because it was the nature of the business. And it was a blessing to know what you anticipated your line of credit to be. And again, you can manage when you have this kind of information, you can manage your business. You can anticipate shortfalls and other issues occurring. So one of the things is beyond just the understanding the cash flow is cash management systems. So can you tell us a little bit about some of the cash management systems that are available and that can be used to beyond just the numbers to help people manage their cash?
Yes, well, certainly, having, a good banking system and making sure that you can get those receipts in quickly is number one for a cash flow management system. Several of the banks have great products to get the money in very quickly, and I highly recommend you work with your bank to get the right tool in place. Second of all, some of the financial systems that are online, I really like a lot of the cloud-based systems such as QuickBooks Online, NetSuite for a little bit bigger companies are very strong at getting that money in with their cash management tools and providing a lot of this integrated forecasting more on the NetSuite side. But I think those are great tools to use. Anything to get the money in faster is really important in this game.
Now that you understand a little bit of cash management, we're going to go to break in a minute or two. How do you improve some of the cash? Once you have it all in place, how do you, besides the receivables, what are some of the things you might put in place to improve that cash flow?
Yes. So once you have visibility, our goal here is to get a windshield, a visibility pattern, so that we can plan. So once we have, a 13-week, typically is where we start. Some businesses we do 29, some can be up to a year, as Alan mentioned. We want to have that visibility so we can see when the peaks and valleys are going to occur. Once we have this visibility into the business, and typically what I see is typically within 4 to 6 weeks you have very clear visibility, and it gets fuzzy as it gets further out. And that's okay because it will get clearer as it gets to you. But having a 4 to 6 week window with very clear visibility allows you to plan. So you can plan, for instance, if you have a line of credit tied in, you can plan how much you need to borrow from line of credit, when you're going to be able to repay it, when those receipts come back in. You can plan, okay, I've got a standard payment that comes up here. I know I need to purchase line equipment. Maybe a lease makes more sense.
Okay. Thank you. We'll continue that conversation when we come back.